Okay, I want to talk about power laws. The power law is the defining concept of venture capital, and it's why I think venture capital has gone off the rails. So let me explain. A power law is a description of a distribution of data in a data set. And in this case, in venture capital, the data set is a venture capital fund that consists of a number of portfolio companies that the venture capitalist is investing in. In a power law distribution, there are a very small number of those data points, in this case companies, that have extremely high values and a much larger number of data points that have very, very low values. When there are a lot of small values and then a very few large values, the power law looks like this. In a normal distribution, where most of the data points are clustered around the average, the data looks like this. So why is this a problem? The problem comes because venture capitalists believe that the only way to make money, to outperform the average market return, which is what venture capitalists are trying to do and what their investors are expecting from them, is to deliver a power law return in their portfolio. And they believe that the way to do that is to force every company they invest in to achieve that outsized return. Because if you think about it, investors don't know when they're making that initial investment which of these companies is going to be that potential big returner. The problem is there are so few companies that are actually capable of becoming those returners that when they are forced by their investors to try to become something that they are not, they cut corners, they avoid regulation, they take it out on the customer, they expect society to bear the cost that they don't want to bear. And that's where all the harm comes from. But it's not just the companies that venture capital is investing in that causes this problem with the power law. It's also the companies that they don't fund because they don't believe they can be those grand slam hits that will carry the rest of the portfolio. And what we lose when we don't have capital for those companies is solutions to a lot of the biggest problems that we're facing, desperately needed solutions to the housing crisis. I think there's another way, a way that we can align investor outcomes with what's in the best interest of the companies that they're investing in and society at large, and will ultimately produce better innovation that solves the biggest problems that we're facing right now. And I've explored those answers in my new book, World Eaters: How Venture Capital is Cannibalizing the Economy, and is available wherever books are sold.